Hello, investors, and welcome to the new financial year FY24. In last few weeks, we have met videos regarding market timing, and you would have gone through some of those videos. Also, the next question which was asked about how do we pick stocks when market goes through this kind of correction and then it rebounds? And the answer was you have to look through stocks which are showing strength. And I did create a video 5-6 months back, I think, when we had the June correction, that how to find stocks with strength during correction. And you can go and you can watch that video. But strength is not the only way how money is made. Money is made out of momentum as well as money is made out of value. And usually you will see the value stocks, they will not be in strength early. There is a lot of big buying happens when the stock prices are depressed, when the valuations are attractive, and technically when it doesn't look great. But that is the time you also get margin of safety. So there are two ways to make money. You buy the strength, you buy the momentum, or you buy the value when there is enough margin of safety, but your time horizon will be longer, your patience will be required, and your conviction is needed, your background work is needed. And then after a certain point of time, things change. And I think in last year, we highlighted that through multiple stocks, Aegis was one of the best examples of identifying value when there was no momentum, and luckily quickly the momentum came back and the stock almost became a 2x. So in the current market, how to find value? And this is one of the indicators, this is one of the checklists, but I don't always look for this, or I don't only look for this, but this particular indicator is something which I closely watch every month. So let me highlight that. So whenever market goes through a major correction and whenever a lot of stocks are heavily corrected, one of the data points which I look at where the promoters are buying, because see, the prices are cheap, the correction has happened, and these are the times when promoters also, they find value in their business, they come and buy. And who knows the value of the business better than someone running that business himself? And you will see that whenever there have been big corrections, the promoters usually they start coming up and they start buying their own companies because they find value in the companies. Now, please note that we don't need to discard the other things which we need to look in investing, whether it is balance sheet quality, whether it is cash flow quality, whether it is growth. And many times these numbers might look bad, and sometimes because promoter has an idea of what is coming, it improves, but sometimes it may not happen. So promoter buying is not a guarantee for success for sure, but it is one of the strong criteria. That is how you have to look at it. Also, we need to be little cautious about the corporate governance, because many times promoters might be buying which looks visible to all, but there could be a lot of things which can happen behind the curtain. So we need to have a bit of trust in, the promoter activities. That is point number 2. And point number 3 is promoter can buy 100 shares of just 5 lakh rupee also. But this buying has to be significant enough to say that, okay, there is some kind of, considerable amount of money which is being put, so that we can say that the skin in the game has increased. Just buying 1 lakh rupee share doesn't matter. So now for a big company with a 2 lakh crore market cap, a 1 crore buying could be lesser versus a 1,000 crore market cap company, a 1 crore buying could be decent. So we need to have some kind of parameter, and the parameters may not be exactly linked to market cap. Like on a 2 lakh crore market cap, a 200 crore buying might be very, very less. But when you see the promoter's own net worth, 200 crore might be a decent amount. So accordingly, we need to see and we need to take our call. But what I do is typically in any kind of small cap stock, if there is a buying around, 1 crore rupee, I find it decent. And whenever we are talking about a large cap kind of companies, any buying around more than 10 crore, 15 crore, from a promoter perspective, I consider it decent. The other thing is many people, they just look at the buy data and they say the promoter has purchased, but they don't look at the sell data. So the way we have to analyze this, we have to look at the buy side, we have to look at sell side. So I will cover all of this. So how to go ahead about all this promoter buying, how to collect the data, how to analyze the data, and then how to identify ideas, and then how to deep dive the ideas. So this is what I will cover. and let me walk you through. So the first question comes from where to get the promoter buying data. And the best source is directly the root source, the NSE website. So I'm providing link in the description box. This is the link you need to go and you need to download the promoter buying data. Now, how we do it, let me show you. So you can see this is the link. If you go to this URL, you can see the promoter buying. I had picked HCL, but let me remove all the companies and let's just refresh it. So if you go, you will see a list of companies where insider buying is happened, and you can select whether you want data for 1 day, 1 week, 1 month, 3 months. I think 1 year it doesn't allow, but up to 3 months, custom 6 months, you can try. So let me just try it for 3 months. And when I click 3 months, then you can see this has refreshed and lots of data is there. And then you can download this in the form of a CSV. This is how you get the insider trading data for all the companies. And here, though you see few columns, once you download it, this is how your downloaded data will look like. So let me just unfilter this. And this is how your downloaded data will look like. Now let me explain each of the columns and which columns are important. So symbol is the company symbol. Company is the company for which the data is there. And then the name of the acquirer. So he has to be one of the promoters, and there are different kinds and categories of promoters. So when you will click this, you'll see there are multiple categories of promoter: director, employees, immediate relative, key management person, promoter group, promoter. These two are main promoters, promoter group and promoter, but even they are part of promoter group because they're employees or they're directors or they're on the board. So they have a fair idea of the management. Type of securities, mostly it will be equities. Number of security prior means before this buying or selling happened, what was the total number of shares this entity was holding? What was the total percentage of share this entity was holding? And then in this particular transaction, how much was added or how much was sold? And then what was the monetary value? This is in rupee terms, monetary value, which is that day price multiplied by the total number of shares. And then whether it was a buy or it was a sell or it was a pledge, it was a revoke, and then what type of shares. And then once the transaction happened, what was the total number of shares and percentage share. And then on which date this transaction happened, on which date this transaction reported. And this is very, very important. What was the mode of transaction? So many times you'll see buy happened, but it's just an ESOP. So we have to focus on market transactions, which is market purchase and market sale, because we are telling promoter buying in the open market, promoter selling in the open market. So we have to only look at market purchase and market sale. And then we get this data. I add few more columns of like adding, year and month just to see how things are happening. Typically, this is how your insider trade data is, and you can download 3 months of data or 1 month of data in one go. And I do this exercise every end of the month. I do this exercise just to see if there is something interesting or if there is something which is coming in my technical scanner and promoter buying is also going on. That's a good sign, like that happened in Jindal Saw. Or I think when RPG Life Sciences was there, around 500 rupee promoter buying was happening. I mean, there are a lot of stocks. I can give example. Now you have this data, but how to analyze this data? So in Excel, you need to learn a little bit about Power Pivot, how to work on the pivot. And I created a pivot out of it. But what I am doing is I have the company list and I'm interested in last 3 months. So I have picked 2023. And in categories of person, I have almost selected everything except this dash because I don't know what is it. Type of security, if you see, I am interested only in equity. And mode of acquisition has to be only market purchase and market sale. And then the transaction type, which I can show you here. If you see the transaction type, which is acquisition disposal type, which is buy and sell, I place it here. So for every month, I know how much amount and I fill this value by value. So the value was there in rupee. I have just converted into crore and I am picking it here. So now in every month for every company, how much of promoter buying is happening, how much of promoter selling is happening. And maybe I can just sort it based on monetary value so that we have high value transactions there at the top. So here you have it. So you can see recently HCL, a big selling has happened because government sold a big chunk, almost 3,000 crore rupees of sell of government did. If you see another company, Coforge, continuous selling is happening, I think, by the PE fund which owns it. Syngene, we know the promoter, they had sold a stake recently. See, Bajaj Finserv, if you just look at buy data, you will feel that, oh my God, 114 crore of buy happened, 65 crore of buy happened, 373 crore of buy happened. But against that buy, there is some promoter sell also. So basically, many times promoters sell to reshuffle their holding in terms of corporate entity, or many times somebody might be buying, somebody might be selling. So then we need to get into nitty-gritties. We need to understand who is buying, who is selling. Is the person who is buying a core promoter, and if the person selling is a non-core promoter, then it's a good thing. But if both are core promoters, then there is nothing major to take out of it. Or if the buying is happening by non-core promoter or selling is happening by core promoter. So many times people just look at a screener data and they say promoter buying, but there could be lots and lots of nuances. I have already covered in many videos, like in Ultramarine, I covered in all the details, and still I saw people asking in the description. My only request, first go to the video, look at the detailed video or do the detailed exercise yourself. If you just look for simple 2-minute viewing and you want to solve everything, I'm sorry, you will miss the data, and basically you will take a misaction on the wrong interpretation of data. So look at both sides of data. So this is how you place your data, you analyze your data, and then you need to go in deep. If it is only buying, it's okay. If it is only selling, it's okay. If there is both buying and selling happening, that needs little detailed exercise, and then you need to go and see who is buying, who is selling, who is core promoter, non-core promoter, and all of that. Also look at the quantum. There could be lot of stocks where 5 lakh, 10 lakh, 20 lakh of buying is happening. Like see what is happening in Alkyl Amine. Again, a sell is happening, or a Gland Pharma where again a sell is happening. Let me look at some. Yeah. This company, some buying is happening, but 10 lakh of buy, I usually don't give a lot of importance. I need some decent amount of money to be purchased to look at it. But with this approach, within 10 minutes, you have all the data available. You have agreed that you have arranged the data, and you have a list to explore. And this is where the detailed analysis happens, where you need to look at the fundamentals, you need to look at the valuation, you need to look at the technicals, and then see if there is something interesting. And promoter buying, of course, comes with one additional signal. If you reverse it, if the charts are not looking good and you see promoters selling significantly, I think I had highlighted when there was a promoter sell-off happening with Dixon Technologies, and I've highlighted for so many companies. So again, it becomes your additional, warning indicator, because promoters knows their business throughout. Right now, I can remember in 2017 peak, when Motilal Oswal share, it was trading at almost 1500 rupees. Many of the promoters, they were selling the stock at that time. And then after 3-4 years, still the stock is languishing at 600 rupees. Last week, after a long time, the promoters started buying. Or I remember in 2020, each and every executive of this company, Scient, you can think of, they were buying from the open market, and still the stock kept falling. But between 400 to 200, there was an intensive promoter buying which happened. So these are some of the examples. Now let's take a current example and let's analyze. So let's take HCL Technologies. If we see HCL Technologies, we can see some buying is happening. So I'll take two examples, one from a large cap and one from a small cap. So in small cap, I have picked NCL Industries, which is cement. And why I'm highlighting cement, if you look at some of my recent tweets, I have highlighted about possibilities of something good coming in cement because of operating leverage reversion to mean. And I did highlight few stocks which were showing a lot of strength, like Ultratech or JK Lakshmi Cement. However, I wanted to pick something where there is still not a lot of strength, but there could be possibility of value with added sign of promoter buying. So let us look at NCL and HCL Technologies. And the other thing you can do is you can, of course, go to a screener and you can go and you can see what kind of deals have happened in HCL. So once you click it, you can see that Vama Sundari Investment, which is a promoter, they're doing the buying, and almost in March, 287 crore of buying has happened. Even in February, almost 266 crore of buying happened. And there is some minor selling happen with this happening, where this person, Vijay Anand Guntur, he is selling the shares, but it's very small, 8 lakh, 7 lakh rupees. If I have to look the same data in NSE, all you can do is go here, type HCL Technologies, and then you can download the same data in CSV. I have this data ready for you. And you can see the main promoter, they're buying and they're purchasing huge quantities, 267 crore. The same purchase happened in February also. And this person, Mr. Vijay Anand Guntur, he is doing the selling, but this is very, very small amount what he is selling. And if you want to know who is Mr. Vijay Anand Guntur, you can check his profile. He is basically the president and he leads the ER&D services. What is important is you have to remember this person is holding almost 12,000 shares, and what he is selling 100, 200 shares, which is very, very small. And we all are, we all need money for various purposes. It might be for buying a house or whatever. So see, when the selling is such a small amount compared to the buying, then you can ignore this. And this is ESOP trust. This is the employee stock option trust. So many employees, they might be vesting it, and still out of this amount, this is a very, very small amount which is being sold. So net in HCL, some big buying is happening and very small kind of sell-off is happening. That is how I analyze. Now I go to the fundamentals and I try to see it, and then I will go to the technical. So if I see fundamentals of HCL, HCL is trading at almost 20p. If you look at the historical valuation of HCL on a PE basis, historically it's not very cheap. Let me show you on some other things like market cap to sales. It's not very cheap. It's somewhere in the middle mean value. It's very near to the mean value. But what is interesting is, look, almost 4 years HCL traded below this mean value, and almost for last 2 years HCL is trading above this mean value. And you will find this trend in many IT companies. We think whenever there is a euphoria, we think that companies deserve this kind of valuation. It almost went 4.85 market cap to sales, and in COVID, this company was available at 1.6 market cap to sales, and this company never traded above 2.4 market cap to sales. Now, I don't want to get into whether the sector has got re-rated, whether the company has got re-rated, whether it will always stay above or below. What I want to highlight is, before COVID happened, people were not so bullish on IT sector, and for 4 years it never crossed this mean level. What are the chances? Why did it happen? What are the chances it can happen again? Why it will not happen again? That is where we need to go and deep dive and do our analysis. But the good part is, a lot of that froth is gone and we are somewhere near to the mean. And if we look, it is available at 3 lakh crore market cap. And on cash flow basis, the company is generating almost 17 to 19,000 cash flow, which means on a cash flow basis, the company might be available at almost 17, 18 TTM valuation basis. And I look more at a cash flow, not at a PNL. And if we look at the growth of the company, again, all this needs analysis to know future how the growth will be. But of course, the company has grown well. I mean, you take whatever timelines, even when the price didn't move, valuation did move, that 16 to 20 period. Even in that period, the valuations sales went from 30 to 70,000 crore, and PAT went from almost in 4 years, the PAT doubled. So which means if you look at this kind of result, always the result was more or less decent. So valuations, they do look fair, no froth, but not super attractive. If we look at the charts of HCL, let me just show you the charts of HCL. This is a monthly chart, because I'm talking about promoter buying. I'm talking about long-term mindset. I'm talking about investment. So then we have to look at charts also from that kind of time frame. So this is a monthly chart of HCL. And I have repeatedly said, the 40-week, which is 200-day moving average on a weekly chart, becomes important. And a 40-month, which is almost a 4-year kind of time period, that becomes important from long term. And if you see from last 13 years of data, the worst of the correction, this 40-month moving average came to support again and again in 11, 12, 1, 2, 3, 4, 5 months. Then again in 2016, 1, 2, 3, 4, 5, 6, 7 months. COVID was one period where it went below, but it was an abnormal period. It went up. And again, when the correction happened, the same 40-month moving average came to support for almost 3 months. And this is where the promoter buying also started. So this is how you have to blend fundamental, you have to blend technical, you have to blend shareholding data. The other thing I want to highlight is we are doing a detailed deep dive on IT sector. In fact, we had our first session, which went for almost more than 3 hours. And we will be doing 1 or 2 more sessions, which will keep going on. If you want to buy the webinar and watch the recorded version of Super Session 1 and want to attend the next set of super sessions, go to our website, learn.scientificinvesting.in. In courses, look for IT sector webinar. I have given the link below and you can register for the same, where we will not be covering only HCL, but we'll be covering lots and lots of companies. We'll be covering the sector, business segments, everything in detail. Now, let us jump to the second company, which is NCL. So again, NCL is a cement company, and If we look at NCL, it's a small 900 crore market cap company where in one quarter promoter did almost 5.5 crores of buying, more than 5.5 crores of buying. So if I show you NCL, this is NCL, and you can see NCL is a 850 crore market cap company. Now, one way I value these companies, so replacement value is an important concept. So of course we have PE and all, but you can see why I don't want to go with PE. See the kind of margin this company had. This company operated 2 years back on 21% margin, and now it is on 9% margin. And you'll see similar kind of volatility in many cement companies. And earlier also, once in 2014, this company had a 5% margin. Now, how do you know whether a 9% margin is sustainable or 13% is sustainable or 15 or 21? So your P will not be the right metric because you are not sure about your denominator EPS, because you are not sure about the margin. So whenever you look at a valuation metric, you have to understand the mathematics of valuation metric. If you blindly rectify PE, price to sales, it is not going to help. So because let us say, I mean, I can present the margin view in detail, but let us say we don't have a view on margin. So how can we still value the company? So I can still value the company on the basis of its enterprise value and its asset, because assets don't change every year. So there is one metric which I use is enterprise value, net block to enterprise value, which means how much of asset is there on the books and how much of enterprise value I'm paying. And then here you have all the companies, and you can see NCL is very, very attractively placed, where after India Cements, and of course, this is just one metric. There are a lot of things which drive valuation, and I'm not telling just because this metric is interesting, it becomes attractively valued. This is, again, nothing is 100% sure shot thing in equity. Everything adds to the probability, and the more the number of things are in favor, higher the probability of things being in favor. Start thinking in probabilities when you are thinking about equity market. But it does look attractive compared to many companies, and the company has a very decent balance sheet. You can see, it's attractively valued. The balance sheet, they can pay almost more than 6 years of interest. So very decent balance sheet. The company does throw, a lot of cash flows. So that's a separate discussion, but company, satisfies most of the criteria I have seen. And at a 9% margin, which is the second worst margin of last 13 years, the company has still done a 50 crore plus profit and a 50 crore plus cash flow. And the company is available at 850 crore market cap, which is almost 15x valuation. And the company is having almost a 850 crore of net fixed asset, almost 868 crore, and something is CW in IP. And you can see this is the borrowing the company has. So that is why the enterprise value and all. So this company looks quite attractively valued to me. Now look what is happening on the promoter buying side. In last 1 year, in fact, in last 2 years, the promoter stake has gone up 5%. And in last 1 year, the promoter stake has gone up by more than 2%. And in last quarter, the promoter stake has gone up by more than 0.7%. So the question is, who is selling? So I would say when you want to get into granularities of shareholding data, I rely less on screener and I use more trading view. Again, I have made a video. I use more trend line, and I made 2 videos on trend line, its functionalities. So if you go to NCL and you see who are selling, in summary data, of course, you can see the promoters, they're increasing their stake. The FIIs, they were selling, and you can see the stake has come down from, this was the last cycle when the run-up happened, and then it kept coming down 3.1 to 3 to 2.8 to 2.3. And this is the first quarter in last 6 quarters when the FII stake has gone up. And DIA, they're almost done with their selling. There is not much there. So if I can show you promoter, we know they're buying institutional holding. You can see after a long time, the institutional stake has gone up where it was going down. And if I can show you the mutual fund holding, you can see there was a big mutual fund holding from HDFC, and they've almost sold and exited. So this continuous source of supply on the DIA side that has been 100% taken. The FII selling seems to be over. I don't know if again it will start or not, but we can just rely on data. And if we look at some of the big shareholders, if you can look at this data of some of the big shareholders, it is still, kind of, it is still falling. Some sell-off is still happening. And if you look at retail shareholder, This peaked somewhere around June. You can see somewhere around March, where from 29.87 it went to 32%, and then it is decreasing. So almost 30.76, almost 1.5% of sell-off has come from retail shareholder, and slowly the count of retail shareholders is also going down. So this is what is happening. And if we look technically at this company, so technically, uh, if you look, it has created a huge base, almost 2 years of correction. And you can see this 145 has acted as a bottom not once but twice for multiple weeks. If we can think of this kind of rounding bottom pattern, looks like it is the first half of the rounding back bottom has been, created. And you can see, I always talk of RSI 50 as a key level on a weekly chart. And after this correction, for most of the time, the stock has spent below RSI 50. This is for the first time it has gone above 50 with lot of strength. It has happened here, but within 1 or 2 weeks, it came down. It could never cross this level with so much of strength. Right now, this level is above all these levels. Still on a strength-wise, it is underperforming Nifty. But after a long time, this kind of strength has come, and you can see the black line is 40-week moving average. What acts as support, the same acts as resistance. It kept acting as resistance here, 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 here. Now, for the first time, it looks conveniently on a weekly basis above. See all this, it went up, but you can see the kind of, dozy it formed, which was not a very, it was a kind of bearish indicator, even though it was above. This is for the first time this closing is without that kind of, long needle on the upper side. So this is how you have to blend the technical data, you have to blend the fundamental data, you have to blend the shareholding data. And also you have to look at the sector. Like first I identified cement as a sector, then I try to find some momentum companies. And then I'm trying to see where value could be there, where my expectation will not be anything in next 1 or 2 months. But I would like to hold it for a year and give it some time and then see how does it perform. If it qualifies all the checklist criteria, all the research, and I'm still happy to buy it. So this is just a start of the research. Then everybody needs to do their detailed research. And this is what we do day in, day out at our practitioner membership, where we study companies, we do weekly meeting, we do webinars, we study sectors, we do a lot of things. And if you be part of our community to study a lot of things in detail, go to the link provided and go for the practitioner membership. Also, last week, well, I think 2 weeks back, when I created the video on market timing, long-term market timing, I spoke about that 200-day moving average percentage of companies. Many of you have asked that how to calculate it and how to use it for sell. So I have noted it, and next few videos I will cover by showing you the exact calculation, how to do it, and also covering the sell side. So there were a lot of companies I highlighted. If you see the list in promoter shareholder buying, I highlighted a lot of companies where promoter buying is happening and companies where promoter sell-off is happening. And you can see the list. The green ones are where significant buying is happening. Some I have not highlighted because I don't know those companies or I'm not comfortable with those promoters. And there are certain areas where I'm highlighting the sell, both sides. Do let me know if you want me to cover any other company in detail, either from the buy side as well as from the sell side, why sell is happening, because a lot of very popular companies I see in this list, not a good sign. Promoter sell-off is not something where, we have to be very, always very worried, because promoters also, they hold 70%, 75. The sell 0.1 or 1% doesn't matter. But a promoter sell-off at a very obnoxious valuation, it's a validation that they are also find valuations very obnoxious, and that is why they're, willing to book some profit. So do let me know if you want to cover some of these companies in detail, and I will cover it. So I hope this video was useful, and do like our videos, do share, because this is how we reach to more and more people. And this is the only thing which motivates us to make a lot of such videos. I will see you again in next week. Thank you.